And Oliver Sloup is at the edge of the trading floor in Chicago at the CME Group. He's with Blue Line Futures. Oliver, what's the mood on the floor today? And we saw that this corn and soybean market really got off to a little bit of a stronger start, but now has pulled back. Why is that?
Well, it's nice to see us gain a little bit of footing. We were pretty optimistic on corn and soybeans at the beginning of last week, and that quickly faded in the back half of the week as I think some of that harvest concern evaporated, and we saw the premium come back out of the market. So we're a little bit premature on getting excited, but I still like the longer-term picture specifically for this corn market. But the bulls really want to see it close back above that 370 level. If you recall, this has been a very pivotal point for us. Last week was support. We broke down below that, now becomes resistance. If we can get a closeout above here, I would expect to see the money flow continue to be coming in on the buy side. Friday's commitment to traders report showed that funds bought roughly 60,000 contracts, putting them net long 20,000 contracts, the first time they've been net long in a very long time. So that's very encouraging to see. As far as the soybeans are concerned, they bought back about 8,500 contracts, but still short about 30,000 contracts. So if we're able to get out above some of these technical levels, I wouldn't be surprised to see a little bit bigger of a rally in soybeans. But keep in mind, November option expiration is this Friday, and that's going to be a big one and could have a big influence on price action over the next couple of days.
With that option expiration, is that 3 cent away from that high of that contract unreachable then?
I think it's going to be tough to achieve. Looking at the open interest, it looks like there's a lot of open interest at the 860 strike and 850. So we would expect to see prices kind of linger in between that range as we head towards the back half of the week, which obviously a lot can change between now and there, but that's what we're looking at here to start.
Yeah, that's exactly right. A little bit of sell-off over in the wheat market. Is that related to a stronger dollar, or is there something else at work here?
I think that's playing a role into things. Wheat has been consolidating in a little bit of a wedge. We've been making higher lows, but lower highs as well, which typically leads to a bigger directional move. If corn and beans can stabilize and get some momentum to the upside, I would imagine that would get some spillover buyers into the wheat market, maybe get this wheat out above technical resistance, but it's still not a little bit of ways away from the market. 520 to 525 has been the top end of the recent range. That's going to be something that the bulls really want to chew through to get that next leg higher.
All right, Oliver, we'll discuss the cattle on feed report and the cold storage report and a whole lot more coming up on the other side of this break. Stay tuned. We'll be back in just a moment here on the Market Day Report.